we should be live. At least that's what it says. So give it a couple of seconds, then we should be live. Great, we are live. Fantastic, awesome, cool. Well, welcome everyone. Super happy for this Q&A. Yuzin, I'm gonna head directly over to you. Yeah, while people are getting in, why don't you share a bit from the engineering side, from the tech side, about how Bitcoin Lapis was kind of engineered, what were the challenges? Yeah, what an amazing job the team did.
Hey everyone, good to see you guys again. Julian's usually the one that's facing all of you, but yeah, good to see you all again. Yeah, we're really proud to have launched Lapis. Bitcoin Lapis is we're not just trying to build something that has already out there. We're trying to show you guys how cash flow from Bitcoin can be done in a very, very transparent manner. Like usually it's hidden somewhere, like how they would say you could get some return out of it, but it doesn't explain how they do it. Like in our case, we're trying to build a product that has never been done out there, that's really, really transparent. And yeah, I'm really proud that we have done it. Thanks to everyone in the team, the engineering, especially Ben, Dennis, Manuel, Stephen, Prasanna, Tanush, Ian. Really, really thanks to all of you guys. It's been a big engineering challenge to work. It's not just the engineering side, but also to work on the logistics as well, and also the partners. You have to coordinate everything to make sure it's all working fine and test out the model. And I'm really happy that I believe we got the most transparent Bitcoin cash flow service out there that's available out there today.
Yeah, I think I think it was a great team effort, and so that's really, really fantastic. Yeah, and you leading that's really, really cool. So yeah, cool. There's a couple of questions on this. If you have any questions, then let us know in the chat as well. I'm going through the questions first that were on Slido. We have German and English questions. So the German questions, we are translating them into English. I will copy paste the question into the chat so that it's easy for you to follow the question. And then Yuzin is going to answer those questions. So the very first question, I'm posting it in, was the question, how are traders or the institutional investors selected? What criteria and security mechanisms are there?
Okay, so for the first partner that we have, it's not quite a trader, but it's an exchange. We work with the trusted industrial partners on this. So for the first partner that we're working with, they're one of the largest Bitcoin option exchange in the world, and they're operating right here in Singapore. We know them personally, visited their office, and they're actually good friends of mine. So we trust them a lot, and they have been doing good work. So that's why we picked them, and we're going to do the same for future partners that we ever work with. Relationships are very important. We have to know them and trust them.
And I think we can also mention that just like anyone that's dealing with crypto in Singapore, and it is a legit company, they have to be, they fall under the PSA, the Payment Services Act. So MAS, the regulatory body, has some oversight over everything. I think that's also important to mention.
Yep.
Yeah. Cool. Second question was, hi there, does it make sense to invest in different patches to diversify? Many greetings and thank you.
That's a great question. So the way that we're doing those batches are just because each batch is structured for 4 weeks. So when the batch goes into is locked in, then we'll launch another batch so that you can still go in if you miss that one, and you don't have to wait until the 4 weeks later before you come in. So on that side, the key thing only for the difference between each batch is just the starting date and the APY, the annual percentage yield. So if they're the same, then it's basically the same, just a different starting date and a different ending date. So we might tweak the APY before it's announced, but we don't touch it usually after it's announced. So if you see that it's a higher one, you feel it's a little bit risky and you want to back off, then you can go. If it's lower and you feel it's safer, then you can go in. But if it's the same APY, then it's exactly the same. The way that's being traded and all that, it is based on the target APY and market conditions, and then the trade that's made is basically doing exactly what it's supposed to do. There's no no difference in any of these batches at all.
Yeah, that's really important. Great. Next question was, how is it ensured that the trading information is authentic and not fake? In theory, fake trades could also be hashed. How do you prohibit that, or how do you make sure that's authentic?
Okay, that is a great question. So I think we're doing the first time in the industry that we're doing a hash on each trade. So you're right that the trade data can be fake, but there is consequence for that. So if our partners or us fake that data, we put in a fake trade and we have to put up a hash for that. We must be able to prove that the trade will hash to that proof later on when we reveal the actual trade, which means that if we do not do that trade and that trade ends up making money, then we'll have to pay up for that, or our partners have to pay up for that because they declare a trade that did not happen. So, and we are also doing our part that our partner is really transparent as well, that we can log in to check that these are the trades that they actually do, and we do selectively do that to make sure that the positions and the placement are actually as per the actual trade that's being done.
And I think we also have to mention, I mean, if we would put in fake trades, we would have to know upfront what these trades are actually doing. So it would actually, if we know these trades are, let's say we would know these trades are positive, why not make those trades? And if we, let's say we fake the trade in a negative way, which makes no sense, then it would also mean that we would have to know that these trades are negative, which is impossible upfront unless you're actually trading with the algorithm that you're planning on trading. Yeah, I think that's also important to understand. We would actually have to know what the future does if we planned on faking it. Now, if we believe the trade is positive, then we would make it anyways. At the end, we want to make money for the customers, and we want to make money on a company. I think that's also really important to understand. Yeah, it's not possible for us to change the trades afterwards because the hash is there. That's the upside of the hash. I think that the next question is a very is one that makes a lot of sense, and we've been working on as well in parallel, which is, will there be smart contracts that prevent a trader from, for example, running away with the money?
Yeah, so there are two parts to that. So the first part is, will there be smart contract on the current Lapis? The short answer is no, because we're not dealing strictly only on Ethereum traded coins. So the first product that we launched is a Bitcoin Lapis, so that deals with Bitcoin, and it's not smart contract supported, obviously. So yeah, for this we're working on a trust-based transparent model. Of course, like if the worst thing that happens, then then we it's all protected by law. So all the entities that we deal with, they're all legal entities in Singapore. So there's a legal consequence if that happens. And on the other side, we are also working on a smart contract based solution, lending, borrowing, which we're in a research and development right now, and we're actually really close to launching our mainnet. It's called DeFi Chain. You probably have heard of that. That's allowing all these coins and all these cryptocurrency to have a DeFi contracts that deal with not just Ethereum currency, not just Ethereum, not just ERC20, but all the cryptos out there in the world, and we can have financial contracts and that could happen trustless on DeFi chain, where you don't have to lose custody of your coin, and you do not have to pass any of your coin custody to us as well, to any other partners.
I just posted the DeFi chain link in there in the chat, so
awesome.
everyone can have it. Great. Next question was a taxation question. I'm going to answer that very simple. Taxation, it's not something that we can answer for you. So the best thing is, depending on the jurisdiction you're in, please talk to your accountant or to your tax advisor. This is in nowhere in our capabilities of answering any kind of tax question on taxation. So let's go on to the next question, which is, what would be conceivable scenario? What would be conceivable scenarios in which you lose your commitment? I take with commitment, it means your investment.
Yes. So Lapis, I think it's all clear now that it's not a risk-free lending. You do take on some risk, and the reason why we're giving you all the trades and all the activities is because you're gonna have to take on the loss if it ends up losing money, and if it ends up more, then you can also see that it ends up more, and then you could get more. So what are the potential scenarios that you could lose money? For the APY that we set is based on the current condition, and it's actually very conservative. It's really safe for us to get the APY that put out currently 6%. It's actually not much risk that's being taken. But that being said, to explain to you the scenario on how you could lose the whole thing. Of course, the first thing is if any of our partners or us are insolvent, then that's the scenario where you're gonna have to, you might lose it. So hopefully that doesn't happen. But on the trading side, for you to lose the whole thing, because we're dealing with crypto options, the price will have to swing at infinite percentage in a short period of time. Like for Lapis is 4 weeks, so you have to go up or go down at infinite percentage. If that means that, just a hypothetical scenario, like if Bitcoin's trading at 5,000 right now, it has to be traded at infinite dollar for you to lose the whole commitment, or trading at $0 for you to lose the whole commitment. Anything in between, you're going to lose portion of that. If for example, if Bitcoin goes up to like 6,000 a week, like 1,000 more, I think that should still be within the range where you're still going to make your APY, because there's still some barrier for trading range. If it goes out a little bit more, then you probably lose a small percentage of it. For example, like if just to give a really bad scenario, like the price goes like 2x, and then you're not going to lose the whole thing. You're going to lose about like 40, 50% of your investment. So, but that's a wild swing, 2x in a short period of time. We're not even talking about a year, just like a week or so.
Also, maybe just we are recording this on Friday, the 13th of March. On the entire, so the crazy swing that we saw yesterday on March 12th, everything would have been fine. We also taken a risk-based approach there. I want to highlight that. So yeah, for us, what's always important is we are willing to sacrifice on potential upside in order to protect people's downsides. This is really, really important. Yeah, and I think that's how this should be done. So yeah, I think that's very important.
Yeah, that's a good point.
Next question. Why does the batch term of 4 weeks differ from the contract term, which is 1 week?
Okay, so each crypto contract that's being traded, is usually for 1 week. There's no there's no fixed period that they can trade it for 1 week or 2 weeks, but usually they go for 1 week because there's an advantage for that. Because at the end of 1 week, the trader can then see what's the current market condition and what's the price for them to go in. So you reset every week, and then you set up a new contract every week. This is so that, like, it's hard to predict what's going to happen 4 weeks from now. So you're showing your time period. You can set a range where the price could go a bound. So 1 week it's safer to set up. It's easier to set a range, where it's like one month it's going to be harder. Like usually if you go for 4 weeks, of course you can get a way higher return, but we do not want to do that because it's more risky to do that. So like the batch term, it's 4 weeks, so it could come up. It would consist of multiple contracts. Usually every week we have 1 or 2 contracts, but it could be more. But that's we're trying to batch it so that the traders have some. Sometimes you can't find a counterparty for the whole batch of it, so they may have to do multiple smaller trades.
Good. Next question. I'll answer that. Is there or will there be an affiliate program? If so, how it is configured? There will be an affiliate program. At the moment, it's not live. We're planning on going live with it in Q2 if everything works, if everything goes according to plan. So Q2 2020. And then we will discuss and be very public about that. We've gotten a lot of questions from you about the affiliate program, so there definitely will be one. And obviously, we hope that you participate in it and you talk about it. And we want to give you a very attractive incentive. But details on that we'll talk about when this is live. Let's cross that bridge when we get there. And yeah, that's going to be an important one. Anything from your side, Yuzin, you want to add there?
Nope. Just that the team is already working on the affiliate program, so it's already in the pipeline.
Yep.
Just to show you guys that.
Final question we had on Slido was, what influences do the current exchange rate developments have on the upcoming weekly contract and on the basic Lapis service?
Okay, I think I briefly explained that a little bit just now. For an ongoing batch, the current market is going to determine what price and what the strike the trader is going to go in at for the next trade that they will do. And of course, if there's a wild swing as well, the trader might be doing some hedge as well. And hedge for Lapis is always going to be positive for our users. They will never hedge negative. So if sometimes you will see that there's an activity and then there's a hedge, it will always be positive to the user. So so when there's market condition, there's a wild swing, then they might have to do some hedge to plug the loss. So of course there are some the market conditions will determine what happens. And internally for Julian and myself, we do set an APY for upcoming batch that we feel that's somewhat safe for the market. Yeah, so it does have some implication. I mean, of course, we can't predict what's going to happen, but we try to keep it safe.
Yep. I guess one thing to add in general is it's very interesting that people don't ask themselves these questions when they use other Bitcoin services that are completely intransparent, and they just expect all these things to work out. They don't ask themselves these questions right in the background. At the end, pretty much all these services, they work in a similar manner because there aren't that many ways to generate cash flow out of Bitcoin. So you always need to understand whatever service you're using, you have the same risks. The only difference is that we are very transparent about that. I think that's a very, very important kind of fact. And that's what we live at Cake. For us, that's really important to be transparent. And because we believe if we're transparent, if we give you attractive returns, and if we make it very easy for you to use our services, heck, why would you go to someone else? There's very little reason. So I always understand at the beginning, there's always this aha moment. Okay, so this is how this works. And then once you get more familiar with this, yeah, it gets easier and clearer. And that's also maybe a tip of mine, and maybe using you have something to add. Don't jump into a lake with both feet at the same time. Now, obviously, we would love for you to come with all your funds and deposit all your funds. But I also want to kind of explain to you from a reason standpoint, dip your toe into the water and step by step add the other toe and add another leg and go deeper and deeper. The more trust you have, the easier it gets. And we also understand we're starting this right now. I mean, we have a very strong track record, but at the end, it's a new service for you. And so, try this out, try it out with an amount that makes you feel comfortable, and then step by step start increasing that. The more comfortable you get and the more you understand it, the easier it will be to make those decisions. I think that's a very important one.
Yep.
Yeah. Anything you have to add here?
Yeah, I would like to add one more thing. It's like Lapis, the fact that it's a service and it's not, I would like to make it clear that it's not a fund. So it's a service, which means that the APY that you see over there, the period and whatever, and all the things that we put up there, those are the instructions that the exchange, our partner that we use, are going to. It's an instruction for them to make crypto options based off of those parameters. So it's a very parameterized instruction. There's no real experts sitting behind it. Like you could predict what's going to happen and all of that. Even for us, when we set APY, we're not predicting that this is what's going to be. We just want to come up with a number that's kind of safe, and that number is going to be passed on to our partners to be traded at that number. There's no real expert, and it's not a fund. It's not like a collective investment or anything like that. We're just passing along what you put in, what the instruction as it is to the partners, and they're going to make the same trade based on that instruction. That's what Lapis is, and this is what we're doing.
Yeah, fantastic. That's a good summary. Cool. If there's any other questions, let us know in the chat. I think we went through everything. Yeah, I think all good. Got a lot of thumbs up. So yeah, fantastic. I think everything clear. People write to me and say all good. Cool.
Awesome.
Yuzin, from my side, all good. Anything else from your side?
Nope, all good. Looking forward to closing the first batch that's publicly open, and hopefully it's all going to be really good.
Yeah, cool. Yeah, check
Thanks for
the
your
limit.
support, everyone.
Yeah, thanks for the support. Check the limit. Finishing on Sunday, unless the limit gets closed earlier. So be sure to check this out. And then, yeah, we're always gonna post and be super transparent about all the hashing infos. And if there's any questions, then please just let us know. Remember, subscribe to the channel here, then you're gonna be updated. We have Telegram, Twitter, Facebook, LinkedIn, everything. We link it up down below. So yeah, just follow us. On our website, if you wanna be notified by email, then just fill it in there. Yeah, there should be no excuse why you miss out on information. We are very transparent and open about that. So yeah, that's great. Cool. Yuzin, from my side, big thank you. I'll give you the last word. Anything you want to say? From my side, thank you so much.
Nope. Thanks everyone for your support and everything. So if you have any feedback, please let us know. Let Julian know. Let myself know. And if you are a developer, you're a JavaScript developer, TypeScript developer, C++ developer, drop me a mail. We will. And if you are interested to join us, I would love to talk to you.